The Phoenix real estate market is not improving. The listing success rate is lower than it was last year at this time. We are maybe on the edge of a buyer's market, and we can expect some volatility with mortgage rates coming up, which we all know is going to affect the market. Not to mention, there's an election coming up, and it is a slower season for us as we get into the holidays. So let's dive into everything going on Phoenix real estate. Starting with the listing success rate. So this is a kind of crazy looking chart, I know, but this is where our listing success rate stands today, 71%. Now, this doesn't make a whole lot of sense if you don't know what you're looking at here, but basically, as you can probably understand, the listing success rate means how successful listings on the market actually are to closing rather than canceling or expiring. So when we have a higher listing success rate, we have a stronger market. When we have a lower listing success rate, it is a weaker market. Obviously, 2008 being very, very low at 21%. Now, the long-term average listing success rate in the Phoenix market is about 68%, according to the Cromford report. And like I said, our month-to-date listing success rate is at 71%. So we are above average. However, if we look at last year at this time, we were at 75% listing success rate. So we are lower than we were last year, although we've seen some ups and downs since then. Ultimately, lower than last year, meaning that our market is a little bit weaker than it was last year at this time. And to me, that's a little bit surprising just because we have had such a great movement in interest rates over the last few months. And this year in total has seemed like it's been picking up a little bit more, or at least the springtime was. And then once we hit the summer, everything really kind of slowed down. And where we stand today in terms of transaction volumes is still lower than it was last year. So all in all, 2024 has become a worse year, so to speak, for Phoenix real estate than the previous year. So the Cromford report is saying this is very normal for us, but it might not feel like normal because you can see where we've been over the last few years with the listing success rate, which is not surprising. Even when we go into like 2016, 2017, before we got into our crazy pandemic time, we were at 80%, 85%. This was in March of 2018. So when we get to somewhere near our long-term average, it feels much weaker than it has in the last, let's see, June of 2014 was when we saw this 68% long-term average number. December of 2014, we were at 69%. And it looks like ever since then, we've just continued to increase in our listing success rate. So that's a long time of having a listing success rate higher than 68%. Obviously, we had our big changes in 2022, and then we've rebounded since then. But, this 71% listing success rate feels very slow. It feels very unsuccessful, so to speak, compared to what we're used to over essentially the last 10 years. In fact, the Cromford report says that over the last 24 years, the Phoenix market hasn't really experienced normal, so to speak, not very much of it at least. We've either been better than normal or worse than normal. There really hasn't been much in between. So what are the factors that are determining this listing success rate? Well, like anything, it's supply and demand, right? So we have the number of listings on the market, and that supply has been growing. And then demand, the amount of buyers that are out there actually buying or absorbing those listings. And obviously at this point, we're seeing a little bit of a change. This has gone down. So we're weaker in our ability to actually bring these listings to the closing table. Why? Well, we do have a little bit lower demand, but we also have a lot more supply. So I've been counting this with you guys every week, and now we're at the 11th week where we have seen an increase in the active listings on the market in the Phoenix metro area. We're at 19,309 today. Now, is this a scary number? It's really not, but it is continuing to climb, and we are not continuing to see our demand climb with it. So ultimately, what is going to happen if our supply outpaces our demand, that's where we start to see prices come down. Now, I mentioned earlier in this video that we are kind of on the cusp of a buyer's market, so that is part of why we're heading in that direction. And I'm going to show more data related to that in a little bit. So our active listings are climbing. Like I said, our buyer demand isn't really climbing with it. And what affects buyer demand? Why wouldn't we see a lot of demand? Well, affordability being really the main factor there. And let's be honest, our affordability is historically not in a good place. So that is not going well for us. In addition to that, mortgage rates. That's the other thing. Of course, that plays into affordability, but that's also a reason why buyers will decide to buy or not. Many of them look at what a monthly payment is going to cost them, and mortgage rates are really what affects that monthly payment. So the way mortgage rates have been going, which was fantastic starting in late August and through September, but has not been so fantastic over the last few weeks. Mortgage rates spike for the third straight week while buyers grow cautious. This is saying the average 30-year fixed rate mortgage rose to 6.44% in the week through Wednesday, hitting the highest level since August, according to Freddie Mac. A week earlier, it was 6.32. And they're saying even though average rates are still more than a percentage point lower than they were a year ago, many potential buyers are still remaining cautious. Applications to purchase a home fell 7% week over week, though they remained around 7% higher compared to the same period a year ago. And I can say that all of this is true. We saw a really big move in mortgage rates and unfortunately just didn't see a lot of big moves from buyers. I think a lot of buyers were waiting on rates to come down a little bit further. They were encouraged by the movement in mortgage rates and thought they have to go down further. I'm going to wait for a little bit. And I think a lot of buyers are also waiting until after the election. And so that has given them some pause as well. So what happened with mortgage rates last week? Well, it wasn't a very exciting week, which is okay. We'll take it. Mortgage rates mostly steady this week after an uneventful Friday. They said that Friday was the smallest move of the week, the rate holding perfectly in line with Thursday's, only 0.04% above last Friday's latest levels. In other words, a perfectly flat day and a flat week. So not a lot of excitement. However, we can anticipate there's probably some volatility coming up, and Mortgage News Daily is saying that because the next big move will arrive between November 1st and November 6th due to a confluence of massively important events, including the jobs report, presidential election, and Fed rate announcement. What a week. That is a lot going on. So as always, there's no way to know how these events will play out ahead of time, only that the rate reaction could go big in either direction. So as you guys are out there, whether you're listing your home for sale or you're anticipating buying, just know that week you should be paying attention to what happens in markets and how that will affect mortgage rates, whether you are asking your lender if you're working with one or just watching my videos. Keep up with that because we could see some big changes one way or the other. Now, rates last week ended at 6.68. This is a really sad looking chart because we had so much improvement in rates all the way down here. I can't live in the past anymore. 6.11%. And then it just went up and up and up and then a big spike. And here we are again, basically back to our, where was this? August levels. Can't look at it anymore. Moving on. So first-time home buyers, nearly a quarter of prospective first-time home buyers are holding off until after the election. This isn't really surprising, and I would argue it's not just first-time home buyers that are saying this. There are a lot of folks out there that are waiting until after the election for one reason or another. And frankly, I think some people don't even know what reason. They just say that because it feels better to say it. But we are seeing a lot of this pause, and I've talked about this on past videos, those statistics around what happens with an election, and it is very common to see most people pause their buying and selling activity, wait until after the election, and then they actually pick up doing what they wanted to do no matter what. Like most people actually don't not take action after the election. They just wait to see, and then they still take the action they were intending on taking. So it's interesting because after elections, transaction volumes usually increase and prices usually increase as well. So we'll see if that holds true this year. But there's a quarter of prospective first-time home buyers that are holding off until after the election. And why that's important, they call this out because they're saying 26.1% said they're waiting to see if Harris's housing affordability plan goes into effect. 15.9% are waiting to see if Trump's housing affordability plan is enacted. So a lot of this is hinging on some of those promises of plans for housing that could make things a bit more affordable for first-time home buyers. So this is definitely affecting those first-time home buyers who are pausing. And I'm not saying not to pause. I think you need to do what is right for you. I also think that some of these incentives with housing could bring out a lot of buyers if they do enact them. And so it would be so awesome as a buyer to get some of those incentives. And it also will create a lot more competition. So where you may save on one end, we may be seeing higher prices. I'm just, speculating, but that is something that I would caution for pausing. Also, who knows how long some of these things could take to actually take effect as well. And meanwhile, we'll likely see some price appreciation. Therefore, it could be more costly for you to purchase in the future than it is right now or whenever you're ready. But again, I say all of that to say, you got to buy when it's right for you, when you're comfortable, when you can afford it, when you feel like it's the right move for you and your family, and you have a long-term time horizon. All right, moving on. Let's talk about the Cromford Index and what's going on there, because I mentioned that we're kind of on the cusp of a buyer's market. And before we get there, if any of this is helpful to you, make sure you hit that subscribe button and share it with someone who would find it helpful. I'd love to share this information and have more people be part of our community every single week. So here's where we're at with the CMI. If you're not familiar, I follow the Cromford report. They are amazing in what they do in analyzing MLS data here in the Phoenix area. And the way that they read this is anything between 90 to 110 is considered a balanced market. And this is the Phoenix metro area. We're at 92.6. And so what does that mean? Anything under 90 is actually a buyer's market. So they're saying now that we've gotten under 94, we're kind of headed in that buyer's market direction, which frankly is surprising to me. I did think with the rate changes over the last couple months was going to bring out more buyer demand. I thought that the CMI was going to start to go up, and looks like I was wrong. So we'll see where we go from here. Supply's at 82.2. Probably about 2 months ago, supply was matching demand at 76, 74. We were around that range. So supply has increased quite a bit while demand has not changed all that much. Like I said, I think we were at 74-ish around there a couple months ago. So it's gone up a couple points, but nothing too significant. So as I showed you in that chart, we're seeing the supply climb. It is outpacing our demand. The way that we can measure demand, or at least one of the ways that the Cromford report is able to calculate this, is looking at the number of listings under contract. And we looked at this briefly last week just to see where we were at. And we've had a couple weeks of an increase in listings under contract, but really not anything significant. There were a few weeks there where we saw it increasing. It popped back down, kind of going back up. Really no trends at this point to show that our demand is headed distinctly in one direction or another. Now, we always look at the CMI for every single city in the Phoenix area. So let's take a look at what's going on here. You will notice there are a lot of red arrows. In fact, everything from Gilbert to Fountain Hills, which covers every single seller's market on this chart, has a red arrow, meaning that that has moved in a direction away from a seller's market and has moved more towards a buyer's market. So the cities that had the strongest amount of, seller advantage have all moved away from that over the last week. Now, they're saying the average change month over month with all of these major cities is -4%. Last week, we saw a -3.3% change. So we've increased in our change away from a seller's market. Again, another reason why we're seeing that overall CMI headed towards the buyer's market. Now, as we look at this chart, we can see that Buckeye, Maricopa, Queen Creek, Goodyear, Surprise are all in a buyer's market already. And then we've got Peoria kind of on the cusp of that. Tempe is balanced, Cave Creek is balanced, Gilbert is balanced, Paradise Valley balanced, although it went down 23% month over month. So Paradise Valley is losing a lot of steam there. And then Avondale up to Fountain Hills all are technically sellers markets. However, like I said, all of these have moved away from a seller's market direction over the last month. So we'll see where things go. We have a few more weeks until the election, a few more weeks until we hear another jobs report and the Fed commentary. So all of those things could affect rates, which will affect demand, which will affect the market. So we'll see where things go from here. In addition, that supply continues to climb. So another thing for us to keep our eyes on. Now, I also like to look at the contract ratio because this is kind of our heat map to see what's going on in the various zip codes. And we have a lot of green and a little bit of blue. All of that is meaning like balanced and also cold markets. There are a few yellow zip codes that are hot. So some of these West Valley zip codes, Tempe also is like the only East Valley zip code that is technically hot. So this is kind of what's going on all throughout the valley. Now, I know in the beginning we talked about the listing success rate. So if you are a homeowner who's been thinking about selling your home, that's some good information to know before you list your home. And I actually am able to break down the listing success rate per city. So if you are curious of what is going on in your city in particular before you list your home, check the description. You can request that information below. And for buyers out there, if you are kind of like licking your chops for a buyer's market and you're excited for some future changes, not to mention November, December, and January are historically the best times to be a buyer in any market, check the description below. I have a link for a discovery call where we can talk a little bit more about market conditions, the needs that you have, and I can help you understand if now is a good time to buy or not. Thanks for joining me on this Tuesday market update. I will see you guys all next week on my next update.